Well, good afternoon, everyone. My name is Anissa Franklin. James is unavailable at this moment, but I did want to take the time to say thank you for popping in for Workforce Wednesday webinars. And today our host is none other than Wallace Barber of Wallace Barber State Farm Insurance Agency. Now, Wallace and I have a long history together. We went to school together back in middle school. And then we were together again in high school at Bryan Station High School. We were both in band. Wallace is a true friend who has 16 years of experience with his own insurance agency. So Wallace, if you would go ahead and turn on your video, we'll get going today.
Yes, good afternoon, everyone. Yes, good afternoon.
It is so good to see you. Thank you for
popping in. It's good seeing you too as well. Thank you. Thank you.
So, what do you have for the people for today? We're interested in hearing more about how we can be wise with the things that we own and insurance in particular.
Yes, thank you. Yeah, so I got a few topics I want to kind of talk about today. I want to kind of talk about life insurance, kind of talk about the importance, having renter's insurance and or homeowner's insurance. And then we'll kind of talk about car insurance. We got, people always want to ask, how can I save money on car insurance? How can I get this rate lowered? So we'll kind of talk about those three topics today. But first, kind of talk about life insurance. That's something that's very dear to my heart. It's one thing we always try to have that conversation with all of our policyholders about life insurance. Life insurance, I was telling everyone, it's a great way to pass along what I call generational wealth, onto your family, to your kids, to different charity events that you might be dear to your heart. What we found out is a lot of people, when they purchase life insurance, usually they purchase it due to maybe like a life-changing event, something that may occur, whether it's, they recently got married, whether they bought a home, it could be a childbirth, or it could be a death of a loved one. Those are usually events that trigger people to purchase life insurance. And then we try to just have that conversation to try to see, okay, how much you need, what can you afford? Because one of the first questions people always ask or assume, they always assume that life insurance is too expensive, or I can't afford it, or I just don't want to talk about it. But there's different types of life insurance products out there. You have like term insurance, which is very inexpensive. Then you can go with permanent insurance. And usually the conversation comes up, well, which one's the best? And here's what I tell everyone when I'm talking to them about life insurance, whether it's term versus permanent insurance. The key thing is you want to have something that's in place in the time of death. Because when you pass away, your beneficiaries are not going to ask me whether you had term insurance or permanent insurance. They want to know, did you have any insurance in place? We get that call constantly when someone passes away. The first thing they ask, did they have any life insurance with you guys? And so we got to tell them yes or no, whether or not they have it. But the thing about life insurance, has many benefits to it. You got some, what we call, of course, the obvious is a death benefit. If you pass away, you leave some money alone for your kids or for family. But also living benefits, a lot of people are not aware of. And so the living benefits include like doing policy loans, or you can borrow against the money. You can do a policy withdrawal, where you can just reduce the death benefit of the money. Or you can do what's called paid up options, where, say, for instance, you paid on it for a number of years. If the policy's paid up, you don't pay on it anymore. So all these options are available, especially in permanent insurance. Whereas term insurance, like I said, you pay them for a specific term, and once that term expires, that's it, and you don't pay on it any, or you finish with it to renew for another policy. So that's kind of in a nutshell the life insurance. And use what I tell people all the time: life insurance is kind of giving an example of someone who is preparing for the future. I know a lot of times you see the GoFundMe accounts and funds, which I have nothing against that, but a lot of times that just shows that, hey, maybe they've been planned properly, for the unexpected. So that's what life insurance is, usually the first step as far as in planning for the unexpected. Then also an opportunity to pass along generational wealth, pass along, take care of your kids and siblings. One of the questions or comments or pushback we get from a lot of people is, one, when we ask about life insurance, they say, well, I have it at my job. But one thing I would say probably 90 to 99% of employers out there, you cannot take that life insurance policy with you once you leave. And we see that so often where someone have it at their job, they retire, and then maybe a year or so after they retire, they say, I want to get some life insurance. And then by that time, either one, some health issues have creeped in, and so they're ineligible, or two, it costs so much, and then they can't afford it. So, so that's why I was trying to encourage people to get it while you're young, get it while you're healthy, get it while it's affordable. Because like I was telling them, life insurance won't be any cheaper than it is today. And so that's why it's always important to look and add that life insurance, as far as the foundation of your financial program. So just a little bit about life insurance, and like I said, I'm going to talk about a couple of minutes about that and see if you have any questions about any questions out there regarding life insurance.
Sure. So I understand generational wealth, but I don't know that everybody else does. So can you explain, one, what is generational wealth, and how can having life insurance help out with that?
Yes, great question. So, a lot of the financial analysts and advisors out there, they usually recommend when you purchase life insurance, start out with either 5 times or 10 times your income. So let's say, for instance, you're making 40,000, 50,000 a year. 10 times that amount is 500,000. So what that does mean, so let's say worst case scenario, something happen, you die in a car accident, or you have some kind of critical illness and pass away. Now you pass along 500,000 or more to your beneficiaries. So what that allows them to do, either one, pay off any final expense that you may have. They can use that to pay off the house. Now, they can still live the same lifestyle they had before without, without going backwards, as far as have to do like a fire sale on their home. So that's kind of it kind of jump starts, some folks as far as jumpstart, as far as give them a heads up, as far as some extra money to move forward, from the devastation of losing someone or losing a loved one. Now, you don't want to take it as an opportunity to profit off someone and encourage someone to pass away, but still what it does, pass along money, so that way is you as the sole survivor will have some money to whether you want to invest in a business, whether or not, like I said, you want to pay off your home. And so now that kind of gives you, some kind, gives you a head start as far as moving forward. And once that person has passed away.
That was good. That was really a beneficial explanation. So thank you for that. I'm looking for questions on Facebook, and I don't see any at the moment. So if you want to go ahead to your next topic, we can do that.
Yeah, I was going to talk about homeowners insurance or renters insurance, but let's talk about car insurance first. I mean, that's always a big topic. That's always we always, in the insurance world, we call that the garage door is the biggest door in the house. So that's car insurance. As you probably notice when you watch TV, you probably see tons and tons of car insurance daily on TV, because one, car insurance, if you have a vehicle and is registered, you're required to carry some type of liability or some type of insurance. So some of the questions I always get asked is, how can I lower this bill? How can I get lower insurance? What are some of the discounts you guys offer? And usually the main thing I tell people is, one, get your car insurance in place if you can. Keep it in place, because a lot of times the longer that you have your car insurance in place with that carrier, your rate should go down. I mean, it doesn't always go down. Like, we're in a time right now where we're having some increases in rates, which we all have, because the cost to repair vehicles have gone up. The supply chain has pushed some of the expenses to repair vehicles. In the past, where a total loss for an older vehicle might cost $2,500 to replace, but now it might be $4,500. So so we are experiencing some rate changes right now. But a couple of things that I always tell folks is this: where do you have your car insurance? Where do you have your renter's insurance or homeowner's insurance? Try to bundle those two together, and you can get significant discount on both your home and your car insurance. If you have more than one vehicle in the household, multi-car discount. So I've seen some people that are, if they're married, we see this every once in a while where the spouse might have their insurance with one carrier and the other spouse have the insurance with another carrier. So if they combine those two together, they get a multi-car discount. Um, we have like one of the biggest discounts we have, you've probably seen it on TV. Ours is called Drive Safe and Save. Progressive, they call their Snapshot. I think Allstate, they have, I can't remember the exact name of it. But what it is, it allows you as the policyholder to have some kind of control or influence on your rate. I know a lot of people think, well, no, I don't want State Farm or insurance company to know where I'm going. I don't know what I want everybody, Big Brother, to be watching me. It's not necessarily someone watching you. What this device and what it does, it provides feedback on your driving. And this is what I've seen so far. This is probably the biggest discount that we offered to date. Whereas, and like I say, we've seen the beacon out to you, download the app, sync it to your phone, and just put it in your car. And then twice a year, just give us a odometer reading how many miles you on your vehicle. And based on your driving habits, we've seen, 15, 20% discount on your car insurance. So, and I would tell you this, just from watching or looking at, my policies this year, the ones who've had rate increases and the ones who didn't, I noticed the majority of the ones who didn't have a rate increase, they had the Drive Safe and Save discount on their policy. And there's sometimes that discount, kind of outweigh any kind of rate increase or rate change that State Farm or any insurance company may have had. So, but here's another thing I always tell people is, they always say, hey, I don't want anyone knowing where I'm going. But how many times, if you have a smartphone, whether it's Apple or Droid, you get in your car and it always already know that you're heading to work, or if you're going home, they already give you, your distance going back home and, an expected arrival time to home. So your smartphone is already tracking that, where you're going. So you might as well get paid and get a discount, on top of that, if your smartphone's going to track it. So, I mean, that's some of the, one of our biggest, like I said, that's one of the biggest discounts we have to date. Some other discounts that I've talked to, we have a lot of policies that have youthful drivers or someone that's getting ready to start driving, that how can I get this rate down? A couple of things we have what's called a good student discount. So if they're still a student and they have a 3.0 or above GPA, they can get a good student discount, which is a significant discount. Once again, the multi-car, multi-line. State Farm has a discount which is called Steer Clear. You can go out there to statefarm.com, type in the word Steer Clear. There's a little program out there for you to complete. And once you finish that, sign this document, and that provides additional discount as well. But usually what I tell my policyholders when they have a youthful driver, what really drives the rate for youthful drivers is the collision coverage. Well, so if you have a vehicle that's full coverage, and you have collision on there, that's going to drive the rate for youthful drivers. So if you can some kind of way get the youthful driver or rate them on a vehicle that just have just liability only, or just purchase a vehicle with liability only and have that for them, that'll give you a huge relief as far as what I've seen as far as on the rate. Now, sometimes just the just the collision coverage alone could be sometimes half the premium on a youthful driver. And what I mean by youthful driver, driver that's 25 or less, so 24 years of age and less. So, and honestly, if they have one accident, it kind of shoots everything out of the water, but still, that collision coverage is usually what drives that premium. And then once again, back to the Drive Safe and Save, or that usage-based rating system we have, that kind of helps with the rate as well. So those few things help for youthful drivers. So if you have someone that's getting ready to start driving in the fall, whether they're getting ready to drive, take a car to school, or they're getting ready to start driving next year, remember write these discounts now, good student discount. So it's encouraging them to, get a 3.0 or above. And like sometimes if you need to call the insurance company, you call me and say, hey, I'm just curious what the difference in the rate is from having a good student discount versus not having it. I've seen parents, have their student or have their youthful driver pay the difference if they don't get the good student discount. So that's something I've seen as well. Of course, the multi-car, multi-line discount, the Steer Clear discount, which I mentioned before, go online to statefarm.com, find Steer Clear, search for that, and that'll give you a discount. So there are a lot of great discounts for drivers, keep that rate manageable. So just keep that in mind. So, a lot of times when we, they have a youthful driver, they get really concerned that, hey, this, how much it's going to be? It's going to be about $400 a month. And it's not always the case. Like I said, there's a few discounts out there to keep that rate down. Another thing I was talking about, which is kind of I think it's a misconception, but like deductibles. A lot of people feel like, hey, the higher deductible, the lower your rate, which it is, deductible about a lower rate, but a lot of times it's not as big a discount as you think. So one thing I always tell people, get the deductible that you're most comfortable with paying. So if you're involved in an accident and you got a $250 deductible or $500, make sure you understand that you can pay that, because I've seen situations where someone had like $1,000 or $2,000 deductible. Like, wow, I didn't know it was that high. Then it's like, this can be a struggle to get my car repaired because I don't have $2,000, laying around. And then when we look at the numbers, how much they would save from having, let's say, $1,000 deductible versus a $500 deductible, and it's maybe less than $5 a month difference. There's wow, why didn't I have the $500 deductible or less? So kind of keep that in mind as well. Deductible, it does give you some savings, but sometimes it's not a big a savings as you sometimes think it's going to be.
Okay, Wallace, so there are several questions that have popped up. So let me go back. So the drive safe and save, understand that although it's, basically tracking where you're going, you're saying like other things are tracking us anyway. And if you can save money by having that, that beacon in your car, then why not do that? But let me ask, so when do people actually see the discount applied? Like, is it in their monthly premiums if they choose to go that rate or that way, or is it like once a year? Can you explain how that kind of shakes out, or how they will see that discount?
Yes. Now here's how it looks. State Farm. So State Farm, you sign up for it, we give you a 10% discount on your overall bill. So you take that, just say, for instance, if your bill is $600 every 6 months, so that first 6-month period, you take off $60 off the top, it may save you $5 or $10 a month. So you have that, and then here's what people get kind of where it kind of trips them up on that discount. So once you add that discount, you have 30 days, really 35. I take on 30 days, 30 days to get that discount, to get your device connected to your phone. Because if you don't get it connected to your phone, that's kind of defeating the purpose, where you're getting a discount, but you're not doing what the company wants you to do. And so what happens is, if you don't get it set up within 30 days, then State Farm is going to go back and take away that discount that you had. They're going to go back and charge you for the months that you had that discount. So keep that in mind. That's the one thing you want to make sure you keep in mind. But then here's the thing. So after the first 6 months, or at the next renewal, what the device will do is sends data to State Farm or to our third-party company, and then we might send an email that what's the odometer reading of your vehicle, which is updated on your app, and then you get that in and use that discount. What I've seen so far, probably about 99% of the time, that discount would increase. It might stay the same or increase, but if it goes down, let's say you was getting a 10% discount, it might go down like 5%. A lot of times what I've seen what happened was someone didn't turn in the mileage or odometer reading. So you got to make sure you get the odometer. Once you get the email or notification on your app, either one, go into the app, update the odometer reading while you're in the car, or two, you just email it to your agent saying, hey, here's the odometer reading for my vehicle. Can you please update it on the app or update the system? So once again, then after that, you can keep track of your discount on your app, because I was just talking with just someone the other day. I think their discount was maybe like 17, 18%, something like that. I think they had a youthful driver and plus themselves. So I think she was saving close to over $200 or more every 6 months, for that drive safe and save on 2 vehicles. So, man, that can be a significant savings that you're missing out on just by not having that device. And usually what I tell people is this. Let's say, for instance, and I always make sure I offer it to everyone, because say, for instance, you go to, Best Buy to buy a TV, and then you go and purchase the TV and they don't give you all the discounts, and you find out later, hey, that I could have got this discount here if I just asked about it, or if I just bought the cables that went along with it. So I always make sure I tell everyone up front, here's the discount we have, and kind of explain to them what it is. That way you can try to give you the best rate possible on that.
Like that, I really do. And I have Drive Safe and Save, so thank you.
Good, good, good.
So I'd love to go into the young drivers. Excuse me. And you said that it's better to have, or not better, but to have liability only will also decrease that rate. Is that correct?
Yes, yes. Now, here's the thing as well. So I know with State Farm, we have to rate that youthful driver, a young driver, on one of the vehicles in the household. And they can drive any vehicle in the household. So usually I always recommend is put them on the least expensive vehicle if it's a vehicle that's just liability only. Now, if they driving, they driving your other household vehicle, like your Avalon or your other Toyota vehicle, they will be covered. And if they have an accident in that vehicle, and that vehicle has full coverage, they will be covered. What I was trying to do is try to find try to get that youthful driver rated on a vehicle in the household for the least amount of money possible. And that way they still can drive any vehicles in the household, but this way we kind of get them rated. So, because one thing we see happen from time to time, our policyholders might not told us that they had this driver in the house, so they got the license, they may have just forgotten. Then they have an accident, and then, State Farm, they want to know who is this driver, how long they've been driving, what's going on here. And then, then we have to go through all that as far as getting that driver rated on the vehicle, that way. But still, and here's the thing about Kentucky as well, or something that's new, when we was coming along in this, you get your license usually within 30 days, or get your permit, you get your license within 30 days, but now it's a little different. So I think it's about a year or so before you get your permanent license. So the one thing about that as well, so you got a little time as far as when a youthful driver turns 16 or whatever, to get the permit. So you don't have to necessarily let us know, or won't necessarily rate them on the vehicle until they get that permanent license. So as long as they have like the permit or the temporary license, as long as you give them permission to drive, they're covered. Just as long as you follow the guidelines for that state, whether it's whether you got to be in the household with them, or they got to drive a certain time periods, whether the day, whatever that is, they are covered. And once they get their permanent license, then that's when you contact the insurance company and say, hey, I have a driver in the household, they just got the license, and we need to rate them on the vehicle in the household.
That's good. So let me ask too, now that things have changed with the way driver's licenses are issued for the younger drivers, does driver's education, does that help with any rates, or does that make them a better driver to lead towards better rates?
Yes, I failed to mention that earlier. Yes, so driver education, there's some courses out there that once you do the driver education, that will give you an additional discount as well. I'm not sure I haven't seen very many youthful drivers taking them here lately. I think I know Boone used to be a very popular one, and I think there used to be one out on Old Frankfort Pike, out there, like they had like a driving skid and stuff like that. So there is some classes out there that you can take, the driver education courses, that will give you an additional discount as well. That is correct.
And you said youthful drivers or younger drivers are 25 or
Younger.
younger.
That is
Okay.
correct. That is correct.
All right, I see some other questions on the homeowners insurance, but you haven't reached that yet. So if you want to move, that's fine. Or if you want to stay here.
Yeah. I can go into homeowners insurance and renters insurance. I'll try to kind of talk about both at the same time. Let's start with maybe renters insurance first. It's kind of a simple one. So renters insurance, I used to try to recommend that to everyone that's renting an apartment or renting a house or renting in general, because there's so many things that renters insurance covers for such a low dollar figure. So like, for instance, it covers liability. So let's say, for instance, if you're in a home and you leave the stove on and it burns down the house, you have liability insurance to cover you if the landlord or the owner of that property said that you're liable. It covers your personal property. Use the way I explained personal property. Anything is not permanently attached to the home that's your personal property, like your clothing, your furniture, any toys, computers, those things that you own, those are your personal property. And so that's covered if it, it's covered whether it's through theft, whether it's, has some kind of fire in the home as well. That's all covered. Covers loss of use. So let's say, for instance, you do have a fire and you have to be out of that apartment or that house, let's say up to 24 months. Most policies cover the 12 to 24 months. That renter's insurance provides coverage for that as well. And a lot of times people are surprised how much renter's insurance costs. Most time it costs anywhere from, let's say, less than $20 a month. It all depends on how much coverage you get as far as personal property, but it usually costs anywhere from 10, 15, $20 a month for that renter's insurance. And then also another thing, especially with State Farm, if you already had that renter's insurance for a couple of years, then say, for instance, you decide to buy your first home, then you get some credits, longevity credits that you can pass along to the homeowners as well when you get ready to purchase that home and get the homeowner's insurance. So that's just a few things about renter's insurance. Like I said, it protects your interests because the landlord, they already going to have coverage for their property. They usually require it, especially if they got a mortgage or whatever. They're going to have coverage for theirs. But their insurance does not extend or does not cover your personal stuff. Is basically what I'm trying to say. So if they were to have a fire, they're going. I've seen this happen a few times where a tenant has a fire. It all depends who caused it. If you caused it, they're going to come to you first, find out what's going on, and try to come after you. So you got insurance, and then try to see what they can do as far as take legal action against you. I had a situation a couple of years ago where one of our policyholders, I guess, left the bathtub water on, and the bathtub overflowed and damaged the unit below. And so the landlord contacted our office and said, "Hey, do they have renter's insurance?" I said, "Yes." So we need to file a claim against that policy because, their negligence, caused damage to one of our units. And so the renter's insurance paid out for that as well. So renter's insurance, like I said, pays out a lot, in my opinion, for just, for little or nothing as far as with the cost. And then a lot of times if you bundle that together, it's not going to impact your rate very much. So let's say, give you some easy numbers. Let's say once again that your auto insurance is $100, let's say $100 a month. A lot of times the renter's insurance might give you 10, 12% discount. So, or 8 to 10% discount. So you take off 10%. So that's $90, and renter's insurance is $10. So you're back $200. So, it's kind of a quick math. So once again, you say, for instance, if your auto policy is $100 a month and you get a 10% discount for having renter's insurance. So take off 10%, which is $10. And let's say the renter's insurance costs $10 a month. So you're back to $100. And then you got renter's insurance and car insurance. And then you got your car protected and you got your personal belongings protected, all for the same price. Or sometimes maybe a little bit more, but that to me, that's why it's kind of a no-brainer to have the renter's insurance, especially you got your car insurance there as well. Now, as far as homeowner's insurance.
Let me interrupt just a second. So that means that if I'm a renter and I don't have renter's insurance, and say that same scenario happened with the bathtub, that would mean that the landlord is now coming to me personally.
Exactly.
Yeah. Okay.
Yeah.
That's
clear. So so they can come to you personally, and a lot of you guys who rent, or even own property, Kentucky's a landlord-friendly state. So I'm not sure how the laws will go in that, but I'm quite sure if you're the tenant, it might not go in your favor if the landlord pursue action, against that tenant. Like I said, first thing they're gonna do, they're gonna see if you got any renter's insurance. If you don't, it all depends on the damages. They're gonna probably try to maybe go through legal ways to try to get that taken care of if they can. And of course, what they end up doing, they're probably end up non-renewing your lease as well if they can. So, so just kind of keep that in mind.
Yeah. So like you're saying, with the quick and easy numbers, let's say it's $10. I'd rather, pay that $10 for a year than, that being $120 as opposed to $12,000.
Exactly.
Yeah.
Exactly.
Oh my gosh, that's great.
Yeah, and then think about it again. Let's say, for instance, you do have a fire, and your place is burned down, and you have to be out of that place and have nowhere to go. that it covers loss of use. So what that means is it covers you while you staying like at a hotel or some kind of uh, residence inn, and kind of covers those expenses while that home is getting rebuilt. And once again, all for like $10, $12 a month, you have that type of coverage. So that hotel stay could be anywhere from $300, $400 or more a month, plus whatever expenses come along with that. So all that can add up once again for like $10 to $12 a month.
So is there a deductible or anything with that, or it is?
Yeah, most times we see a $500 deductible. In most cases, 500 is usually the industry norm or standard you normally see. Occasionally I see a $1,000 deductible, but for most policies that I've seen out there is the $500 deductible for renter's insurance.
Okay.
Now the homeowners is just a little different. The homeowners, of course, has everything the renter's insurance has in it, but then you're going to add the dwelling on top of that as well. And so the dwelling includes just your home. And so, different companies have different policies, as far as what's covered, as far as what they consider perils, whether it's fire, wind, busting your water pipes, theft, all that's covered under your homeowner's policy. But the one thing you probably noticed I didn't mention that we hear a lot about, and probably especially in recent news, is flood. Flooding is not covered under your homeowner's policy. Now it comes to what's the definition of flooding? Flooding is where the water comes from the ground up into your home. That's considered flooding. And if water comes, that's the first thing I always ask my policyholders when they have any kind of water claim is how the water get into the house. If they say, well, it rained, downpoured, and the water came from the ground into the home, more than likely that's the definition of flooding. More than likely, unless you have a flood policy, that's not covered under your homeowner's policy. Now, if the water comes in through the roof, or if it comes in through the windows, comes from up above, yes, in a lot of cases that will be covered under your homeowner's policy. Now, people ask, okay, so when do I need flood insurance? Or I heard someone ask the other day, why didn't I know about flood insurance? Because a lot of times, if you're not in a flood zone, the mortgage company, or they won't recommend or require you to carry flood insurance. But you can purchase flood insurance. We sell flood insurance, not through State Farm, through FEMA. You can purchase a separate policy for flood insurance. Now, keep in mind, if you're not in the flood zone, flood insurance is very reasonable. I have a few policyholders that purchase flood insurance for that very reason. They just want to have it just in case. Now, if you're in a flood zone, that flood insurance can be very expensive. And what I've seen in the past, I think I saw, especially when a few years ago in Nashville had a huge flood. What happens is a lot of times with flood insurance being so expensive, they get underinsured on the flood policy. So in other words, they get the flood insurance to check a box saying we have flood insurance, but then they don't have enough to cover the contents or the dwelling coverage, because like I said, it can be very, very expensive. I do a lot of speaking into first-time home buyers, and that's usually one of the things I tell them about when they get ready to purchase a home. I tell them, look, if you purchase a home, you notice in the flood zone, just my opinion, I would say, look, let's pass on that home and find another home that's not in the flood zone, because I've seen cases where the flood zone where flood insurance is sometimes twice as much, or sometimes 3 times as much as the regular homeowner's insurance. So you just got to keep that in mind as far as when dealing with flood insurance. Now, earthquake is another story. You can't add an earthquake endorsement to your policy. That's just a lot of folks have we have add that and have that coverage on their policy, so you can't add that on there. There's a few other endorsements you can add to your policy. One of the most common ones that I've seen a lot here lately with State Farm is we have one that's called Home Systems Protection. So what that is, it covers like your items that are permanently attached to your home, like your furnace, your water heater, your AC unit. If those items were to go out, they have some certain guidelines on what's covered. If those items were to go out, State Farm can replace those items up to $50,000, and there's a $500 deductible, for that endorsement. So if it's something that I think a lot of insurance companies are starting to have that endorsement, going to add that to the policy. So that's something to kind of think about as well. So the homeowners, I mean, there's a lot of things we can talk about as far as homeowners. I can tell you right now, probably the number one claim that we see with homeowners is probably water, unfortunately. So we always, first question I always ask is how did the water damage, how did it come in, what did it occur? Because we see time, especially older homes might have some pipes that might have some rust or mildew, and then all of a sudden they bust or burst. In that case, unfortunately, in a lot of insurance policies, that's not covered. The insurance policy states there has to be a sudden burst of the pipes. It cannot be something you have a slow leak. I know a lot of times you don't know because the pipes are not disclosed. They're not where you can see them, so you don't know. But so when they have that, so when you do have a claim, that's the first thing they look at. They want to look at to see how open, look at the pipes to see if it's like a sudden burst. Say, for instance, in the winter months, we see that and it's covered because there's a sudden burst when the pipes expand, contract and expand, and then all of a sudden they burst. That's covered. I mean, that's just a sudden burst. You didn't know anything about that. But if it's like a slow leak that's been going on, some mold or mildew, unfortunately, that's not covered under the insurance policy. So, but like I said, we see that a lot as far as with water claims. Usually what I tell people a lot of times as well, especially when you call and have a claim, the first thing you want to do is really get some estimates first, because, a lot of times when we get into homeowners and homeowner policies, a lot of times the damages can be very minor. I know when it happens in a moment, you think, wow, I need to call insurance. But I tell folks, just, let's fix what's going on, try to stop it from, if there's water, try to stop where it's coming in from. If there's a theft, just trying to fix what's assess the damages, and then let's see how much it's going to cost to replace, to repair, or whatever. Then we can look at your deductible, because you got to realize if it's not more than your deductible, then there's no need to file the claim. And that's the one thing I always try to make sure we educate all of our policyholders on, as far as making sure that we just don't file a claim to file a claim. Let's make sure that, we've been wise on that, as far as let's see what the damages are, see how much it's going to cost to repair it or replace it, and then let's look at a deductible to see if it's worth filing the claim or not. So that's kind of the steps I always tell everyone, as far as especially the claim process.
So if I have a number of claims that I'm making, do my rates go up, or is it a possibility?
Yes. Here's the thing: if they're all weather-related claims, we're not going to count that against your weather-related claims. But if you have like a list of claims, whether it's theft claim, water claims, a number of claims, especially if you've been with State Farm for a short period of time, you're going to see a couple of actions they're going to take. Either one, we're going to either raise your rate, or two, we may either non-renew that policy. Because the one thing that insurance companies do, I mean, they know the numbers where, the average homeowner, I can't remember the exact number, average homeowner probably file one claim every, let's say 20, 25 years, can't remember the exact number. Now, if you have someone that's filed 3 claims in 2 years, then they're like, okay, hold on, there's a trend that's happening here. And then they might either raise the rate or non-renew. But keep in mind, if it's all weather-related claims, if it's just wind claims, lightning strikes, those you can't penalize someone for that. But if they're, just theft claims, have 2 theft claims and a water claim, they're gonna be like, okay, something's going on here. We need to reevaluate this risk here.
All right, so that sounds really good. A couple other questions that I see are, what are some things your basic homeowners insurance does not cover? I think you've covered some of that already. But
Yes.
as an agent, do you recommend certain ones, especially for our audience, which is typically here in Lexington or surrounding counties? Are there any rider kind of policies that you would recommend? I know you mentioned the flood, but are there other things that you think we as Kentuckians and homeowners should also have?
Yes, a couple things I recommend, especially just about any of my policyholders that have a basement or sometimes a crawl space, like a huge crawl space. I always recommend an endorsement called Backup and Sewer and Drain. So Backup and Sewer and Drain, it covers where the sewer line backs up into your home and it can damage a lot of stuff in your basement. And I haven't had one of those claims in probably about 18 months, but usually once a year, I have one of those claims. And one of our policyholders, either, hopefully they have, because I always have that conversation with everyone that has a basement. I always say, do you have a basement? And kind of advise them on getting that coverage or adding that endorsement on there. Because if you have a sewer line that backs up into your basement, there's no coverage for that unless you have that endorsement on that policy. Another thing that I usually try, a couple things. One, let's say, for instance, that you operate in a business out of your home. If you operate a business out of your home, make sure, a couple things you want to do. Make sure there's an option. Some people call it option ID or option or add business equipment on there, but that provides very limited coverage. For business equipment, business, whether you have your office, printer, computer, all that stuff. Your homeowners is very limited in what they cover as far as business equipment. So usually I tell people you want one or two things: add an option on there, your rider on there to cover your business property, which give you some coverage. But the main thing I would recommend is getting a general liability policy, because the general liability policy for the business gives you more coverage, more protection than what you would have under your basic homeowners, or just add an endorsement for or rider for having incidental business insurance. So if you operate in a business out of your home, what I would do is get a general liability policy, and usually all depends, just what you have and what you have going on. That policy may cost anywhere from $400 and $500 a year. Of course, you can pay it monthly, and like I said, that gives you full protection for your business. So let's say, for instance, you got $20,000 in business equipment in your home or your inventory and stuff, and if something happens, you want to make sure all that's covered in your home. So let's say, for instance, you have some business stuff in your home, you have a fire, your homeowner's policy is going to cover only certain limits, as far as your business stuff. So that's why you want to make sure that you add that endorsement or really get a separate policy for that business equipment that you have in your home. A couple of things that are not covered, of course, mold and mildew is not covered. There's no endorsement for that. I'm just trying to think some other stuff. Another rider or endorsement, most of the rider or separate policy I see, a lot of times people have like engagement rings or diamond rings or jewelry or furs, guns, just various items, they're high dollar items that, like to have covered under a separate policy. Now, we call ours a personal articles policy. Some other insurance companies might just add it as a rider. And some of the benefits of that, one, it covers that item worldwide. So let's say, for instance, you're on vacation. I use an example all the time. If you're on vacation and you got your rings on, in some kind of way your rings get lost in the ocean, on the beach somewhere, that rider or policy will replace that item, close to replacement value. And there's also a zero deductible. So whereas your homeowners, you lose your rings or something gets stolen or lost, you got to first make sure it exceeds your deductible before any coverage is even applied. So in this rider, or we call it, like I said, State Farm, we call it personal articles policy, it'll cover that item, zero deductible, and we can get that item replaced. And use State Farm, they're usually pretty good as far as, once you file that claim and you turn it in, and they usually get a check out within 48 hours as far as getting that turned around and getting you reimbursed and getting you so way you can try and get that item replaced. So that's something you have. I know we have a lot of folks who have, like, whether people collect watches, especially we see a lot of engagement rings. We also see a lot of furs around there, believe it or not, fur coats. So those are items they get insured, and like I said, it's zero deductible. And if that item gets lost, stolen, say burnt in a fire, zero deductible when we try to replace that same item. So keep that in mind as well, especially when it comes to your homeowner's policy. And the one last thing, we don't see this often in this, but as far as homeowners policy, I very rarely see this. But one thing I always mention when I'm doing first-time home buyers classes is just to make sure that your policy is covered as far as replacement costs, as opposed to what we call actual cash value. The difference is replacement cost is going to replace that item, whether it's lost, damaged, stolen, uh, at replacement cost. So let's say, for instance, you had a big screen TV that you paid let's say $3,000 for, and it gets struck by lightning a year or two later. The insurance company, the replacement cost, they're going to try to replace that same TV that you had before, something similar value. But if you have what's called actual cash value, like, so we don't see it very often, but make sure that your policy replacement costs. But if you have actual cash value, what that is basically depreciated cost. So let's say, for instance, that TV that you paid $3,000 for 3 years ago, now it's depreciated down to $500. So now when you go to try to file a claim, they're going to give you the depreciated value of that TV and not try to replace it to replacement cost. So just keep that in mind. That's one thing I always tell everyone when I'm doing first time home buying classes. That's like rule number one, is to make sure that you understand that you have replacement costs, and also make sure you understand where the deductibles are, because I've seen this happen just in my agency alone, where someone might have filed a claim and they didn't realize the deductible was high as it was, or higher than they agreed to. So I try to make sure, go back through, make sure everyone understands, what the deductible are for their homeowners policy.
Very good. So today we've got like 10 minutes left. And thus far, we've talked about renter's insurance, auto insurance, as well as life insurance. What other kinds of things or products does State Farm in particular have?
Yeah, so you got the homeowners, renters, disability. A lot of people don't really think about disability policies or disability coverage, but I think there's a stat out there that the number one reason people lose their home is through an injury or disability. So we offer disability, and once again, it's very inexpensive. It all depends on, of course, it depends on your occupation, of course, but that's something to kind of think about as well. As if you become injured or hurt. I had a policyholder several years ago. He worked at Toyota, and I think he fell off a ladder on the weekend and hurt his shoulder, so he's unable to work for several months. At Toyota, and so of course he had a life insurance policy, had a waiver premium on that endorsement as well, so he didn't have to pay his life insurance during that time period. But then also, State Farm paid him a benefit while he was unable to work, for having the disability insurance. So, and that's something to kind of keep in mind as well. We have people, we have folks out there that have boats. We offer boat insurance. We offer motorcycle coverage. Something I don't talk a lot about, but we do offer is umbrella policies. People ask, what is umbrella policy? Umbrella gives you additional $1 million in coverage, or at least $1 million above and beyond what you have as far as your home and your car. So let's say, for instance, you slide on a sheet of ice, black ice, and you run to the back of 2 or 3 vehicles, and one person be life flighted. Once again, your auto insurance has some limits, as far as what they're going to pay out. Now, if it gets way up there, I've seen this happen a couple of times where one of my policyholders hit like another driver, and they get an attorney. First thing the attorney might ask, does that person have a umbrella policy? Because they want to know, because we got some extensive damages, because your auto policy is going to be exhausted pretty quickly. So then next thing they want to do is go into looking into getting see they have an umbrella policy. Because once that auto policy is exhausted, then they can come after your personal assets. They can garnish wages. I've even had someone have a lien put on their license. So it's different things they can do if you don't have any auto insurance or not enough coverage if you're involved in an auto accident. So there are some of the things that that we see a lot on our side. Like I said, homeowners, life insurance, renters insurance, boat insurance. With State Farm, we have, I think the last I checked, like over 80 different products that we offer here at State Farm. So there's a bunch of stuff that we have. So if there's something that you have of value that you need to have insurance or coverage for, give us a call. We can probably got a coverage for that.
All right, Wallace. So on a personal kind of level, what made you go into insurance?
Well, I have an accounting background, as you may know. I have a CPA license, and I was looking to do something else because I wanted to get into the financial planning side. I was a big proponent of Dave Ramsey when I lived in Tennessee and listened to his radio show all the time. And I felt there was a need out there as far as, helping people on a more personal level, as far as, especially the finance side. I mean, that's probably my passion, is helping people, whether it's with budget, help them with their finances, as far as whether they want to get into, investing, real estate, any of that. Because that's one thing we do at State Farm. We can help with that, but we have retirement plan. We do retirement planning here as well. And, someone wants to buy investment property. I'm not an insurance, I'm not a real estate agent, but I can help them out. So, I mean, that was the main reason I really got into this, was I wanted to help people out. And so my first option was I was going to be a certified financial planner. So I was really kind of studying towards being a CFP, so I'm certified financial planner. I already have my accounting and CPA. And so I had some friends that approached me and said, hey, with State Farm, you can do both. And plus, you have a wider range of people you can help. And then also you have the marketing power of State Farm behind you. And so then you can help a whole lot more people that way. So that's kind of how I got, got geared or directed towards State Farm, because like I said, first, I want to be a certified financial planner. But then the opportunity came about with State Farm here in Lexington to open up my own agency. And so once I had an opportunity to come back to Lexington, I just jumped on that and been here for last 16 years now.
All right, so I'm sure you get this question a lot, so I'll have to ask, have you met Jake?
You know what? Unfortunately, I did not. Our paths kind of crossed, when we had our convention in Las Vegas about 2 months ago. And so he was there. And so the first day, they had broken 2 different sessions. So the first day, when I was at the little exhibit hall, he wasn't there. So the second day, I didn't go back down there to the exhibit hall. Then I found out later on that evening he was there. So I just missed him. But he was at our State Farm convention. He seemed like just a heck of a guy. I mean, he's there's people that this is conversation he had, and everyone has talked to him. And, say he's a super down to earth guy. Unfortunately, I didn't get a chance to meet him. I wish I did, but I just missed out on that chance.
So I think I read that you also have someone in your house named Jake. Is that correct?
Yes, I have a little 20-pound terrier, terrier mix. He's a little meaner than the real Jakes from State Farm, but he's harmless. But he's 20 pounds, but he thinks he's 80 pounds. But his name is Jake as well. I sometimes bring him in the office, and he stays in here with me and just kind of terrorize everyone. He's harmless, but you didn't know if you're on the other side of the door hearing barking, you think he's a 80-pound beast. But when you open up the door, he'll take off running most times and go hiding up in the desk somewhere. So yeah, we do have a Jake with State Farm here in the office as well. My own personal Jake with State Farm, and he has on permanent khaki colors. So sometimes we throw a red shirt on him. So he have his red shirt and his permanent khaki vest on.
Wow. So if the people have more questions or they want to get in contact with you, tell them how they can get in contact with your agency.
Yes, easy way to get in contact with me is email at wallace@wallacebarber.com. Once again, it's wallace@wallacebarber.com. Or you can call the office at 859-543-0300. That's 859-543-0300. But like I said, I always most of the time I have my phone with me. And, unfortunately, I'm checking emails all the time. So the email is probably the most easiest way to get directly to me. Once again, that's wallace@wallacebarber.com. Thank you.
All right, we've got it up on Facebook, so now the world knows. Thank you,
Okay.
Wallace, so much for being here with us today.
Hey, no problem. Thank you.
Great and right on point. So I hope that you continue to do what you're doing and encouraging people and influencing lives and helping to build some of that generational wealth and all of that as we go forward. Right before we leave, though, I do want to say one thing. So the Urban League right now has a workforce development program that we're doing in partnership with the city. And through State Farm, we are appreciative to have received over 20 laptops that we can distribute to the community. So On behalf of the Urban League, I want to thank you and State
Hey,
Farm
thank you.
for all of your work and your investment in what we're doing.
Hey, no problem. Thank you. Thank you guys for the work you guys do as well. Thank you.
Absolutely. Thank you. See you all. Take care.
Okay. See ya. Thank you.